our in-day series. We started this long back in the month of May, and every Tuesday we are having this session virtually 5 to 7 under the leadership of Ankit. We have already completed 12 sessions under this series, and this is the next and many more to go. Our intention is to ensure that we enhance from an auditing perspective and from an index perspective whatever is currently required from our audit perspective, and enhance our members' skills. I would request to first start our motto song, and then the next things.
येष सुप्तेषु जागृति येष सुप्तेषु जागृति कामं 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 कामंशो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता 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 एतद्वैता.
Thank you. I request WRC Chairman Ankit Jirati to share some words of wisdom, and then we can take the next steps.
Thank you, Chandan Bhai. Very good afternoon, very good evening. It's indeed pleasure to be here with you all in this virtual room. At the outset, let me first recognize the presence of my regional council colleague, very senior council colleague, Chintan Bhai Patel from Ahmedabad, then the coordinator of this entire series of the Technical Tuesday, in which we are trying to deliver the seminar and webinar on the Tuesday on the technical subjects like the IND AS, auditing standard, and so on. We start because the expectation of our stakeholder and regulator is very, very high from each one of us. So what we thought, let's deliver best out of best. So that's why we start Technical Tuesday. Thank you, Chandan Bhai, for all the help. Let me also thanks to CP Khemka ji. Sir, thank you so much for accepting our invitation and being agreed to share your valuable knowledge on the particular subjects. We are really grateful to you. My humble request to each one participants about the regional conference. Friends, first time ever we are hosting a WRC regional conference on Geo Convention Center, in which anticipate participants somewhere around more than 3,000. With what we can say, we are already invited more than 75 speakers and panelists. Along with this, we also hosting what we can say that exhibition stall and exhibition center somewhere around 60 to 70. I request each one of you, please do register in this type of regional conference. This is the annual event in which try our efforts hard so we can deliver best out of the best. Let me also thanks to our today coordinator Sharon Sangvi. Thank you, Sharon, for all the help. With this, I wish you all a happy learning. Thank you so much.
I request Chintan Bhai to share his valuable inputs for our IND-AS and audit colleagues who have joined today.
Thank you so much, Chandan. I think it's really pleasure to be part of this series, and always because every Tuesday means Tuesday like 5 o'clock means there is an IND-AS series. That is why we try to do it since so many time, and like it's like more than 3 months, and then I think it's more than 3 months.
We started in May.
Yeah, we started in the month of May. It's more than 3 months, and every Tuesday when it's a 5 p.m. we ensure that there is something for audit and IND-AS professionals. And Chandan has helped me a lot in this particular arranging the series. Thanks to the chairman of WRC, C. Ankit Rathi ji, because under his leadership, the WRC has been doing wonderful tasks. And very importantly, what he mentioned, one very important message, that don't miss WRC regional conference. The regional conference is a very critical part. It's a flagship event. So I expect everyone to be there, and let's enjoy the knowledge sharing during the conference. So today's topic, and we are having a very eminent faculties, Chandraprakash Khemka ji, and the topic is more relevant and more important because of the going concern issues. And now in the world where there's a war is going on across the world, and there are uncertainty where the market can crash, and it can also go by 1,000 points, 2,000 points in a one day. So we're not sure about the any entity, how can they perform. So as an auditor, what is our role? When we talk about uncertainty related to going concern, what do we mean by going concern? For going concern, we need to look at least next 12 months and more than that. So now, as on reporting date, when I just look at next 12 months, then how can I evaluate the going concern? If the company is not doing business, can I say that going concern is not there? Because going concern doesn't mean that company is not doing business today. Tomorrow it can start also. So what is the role and responsibility? Because there are a lot of companies where, because of the lower business, scale of business, they may not be carrying on business, but however, the plan can be there to continue for long term. What will be the role of the auditor? Whether we have to give a paragraph as a 570 compulsory in this case, or in which case we to provide. So I think there are a lot of particular issues. It may feel that it's easy, it's a simple, but when you really come to a situation, it is a complex to take decision about the going concern. I'm sure that with Chandraprakash Khemka ji having a very vast experience on this field, we are going to get a lot of experience and a lot of knowledge. Thank you so much, Chandraprakash, for coming here and accepting our invitation to share valuable knowledge. With this, I hand over charge to the coordinator of the session, CH Chandraprakash Lahoti.
Thank you, Chintan bhai. I think so. Without wasting any time, I will just introduce our today's speaker. And before giving about his vast experience, first of all, he has worked in two big cities in last 13 years, 10 years in Pune and Pune-related Maharashtra clients. And before that, he was there for 3-4 years in Kolkata. So West Bengal, he has done a lot of listed clients there. So first of all, we are fortunate that Chandraprakash Khemka has dealt with several going concern issues in big listed companies, big unlisted companies. So that way we thought of having him as a speaker who has dealt with going concern during his experience of last 13 years. He is a senior manager with SRBC, and he has an extensive assurance experience, and also worked in internal audits. He has worked with large public sector companies, multinational companies, big consolidations related work he has done. His technical expertise is not limited to audit, but IFRS, US GAAP, German GAAP, various industries such as metal, capital goods, automotive, software, chemical, renewable energy, retail. He has a vast experience in data analytics tools, like huge data sets, can generate a lot of insights through those data as part of his audit. He has always enjoyed doubling his learning and development initiative as his work. And lastly, he is a very good sports person, a very good cricket player, and he has participated in a lot of local ICI tournaments and represented his firm. Without wasting any further time, I would request Chandraprakash Khemka to take it forward from here and provide a lot of practical experiences and practical things what you have dealt with regard to few of your clients, with practical examples in different scenarios, how to deal with, so that our profession will further get a lot of knowledge through it, and they can apply in those clients when they deal with. Over to you, Chandraprakash.
Sure, Chandan. I think good evening to all participants, and thanks, Chandan, for my introduction. I think first of all, I would like to thanks to WIRC, specifically Ankit ji and Chintan ji for conducting this session, which is weekly session on audit and Index series. And thanks for providing me the forum where I can share my thoughts and experience on going concern topic. And I'm sure this particular session would be enriching in terms of knowledge sharing for all of us. So please share your thoughts and queries over chat. So I will try to make this session more interactive, and will take your queries, your discussion while I was running through the presentation. And yeah, so I think without wasting time, I'll quickly share my presentation. So Chandan, if you can confirm my presentation is visible. And
Yes, we
yeah.
can see that.
Yes, and I think Chandan is like my mentor and a role model. I think I have worked for a lot of clients in my tenure in Pune, and we together dealt with a lot of going concern issue. I remember one or two clients. I'm going to take those examples. So it is good having this session with Chandan. So hoping it will be good value addition to everyone. So yeah, I think uh, Chintanji has anyways set the context, but I'll re-emphasize on the importance of going concern reporting. Particularly, I want to basically present you that there's one report which is available publicly, which is issued by Center for Audit Quality Directorate of ICI, which basically has analyzed all the modified opinion which was issued during March 31st, 22. This particular committee has analyzed more than 4,000 entities, and whatever entities in which the audit report has some modification, those modification are around six core theme, and out of that six core theme, going concern is one of the major item. If you see in a particular broad bucket, the reporting under SA 570, which is going concern, is 20%, and the number of modified audit opinion is around 20%. And if I further break this modification into parts, like what are the reason, what are the material uncertainty which led to reporting under going concern, is 60%, which is net worth erosion, 13% where there is a repayment default, particular loan is payable but not paid by the management, and there are other cases. So hence the going concern reporting is very important, and though it is very common but has some complexity which we are going to cover in the ensuing slide. So I think a quick agenda for today's discussion. Although I'm not going to cover the concept of going concern, but what I am going to cover is like quick refreshers, so that you can basically connect with the concept which is there for going concern. We are going to discuss the material uncertainty. What does this material uncertainty mean? What are the key indicators for material uncertainty? And this will be supported by examples which I am going to take. Then again, we are going to discuss the management assessment, why management assessment is important, and how management assessment does. Based on that, what are the audit procedure which is required to be performed by a auditor? What are the additional procedure which auditor need to perform when they identify there are indicators of material uncertainty which may impact the entity's assumption of going concern. Then we are going to discuss auditor reporting requirement. What are the requirements, cases where we need to issue adverse opinion, cases where we need to issue qualified opinion, disclaimer of opinion, and there is a concept of material uncertainty on going concern, which we are going to discuss. And at the end, we are going to discuss the example, scenario, and the extract of few audit report as well. So with this agenda, I am going to first take the quick refresher on going concern. I think, as you are aware, there are fundamental accounting assumptions which underlies the preparation of financial statement, and one of the fundamental assumption is going concern assumption. So I think going concern, it is assumed that the entity will continue in operation to a foreseeable future. Okay, so that foreseeable future is generally at least 12 months, which is given in our reporting framework. Particularly this going concern, whether management need to do a assessment or not, in it should ideally be there in the regulatory framework of a particular country. In our India, particularly, Ind AS specified management has to do going concern assessment, which is coming from para 25, 26 of Ind AS. It is also there in the accounting standard also. So going concern management has to do a assessment is coming from the regulatory framework as well. Okay, and as you are aware, the financial statements are normally prepared on an assumption that the entity is a going concern, unless management have some intention or to liquidate the entity. It can be either voluntary or it can be compulsory. Okay, so how we are going to do a valuation of asset and liability when there is a going concern assumption, and the cases where there is no going concern assumption. I think we know when there is a going concern assumption, we do valuation under normal cost. What is normal cost? It is assumed that the asset is going to realize and the liability will be discharged in a normal course of business. Okay. For example, PP will continue to be valued at a historical cost. But when there is a issue or there is a doubt on the entity's going concern assumption, what we do, we generally do asset valuation or liability valuation basis, breakup basis, or liquidation basis. What exactly it is? It is like PP will not be valued at historical value. It has to be valued at net realizable value, or with, if entity is going to incur some expenses to realize that PP, that should also be deducted. In same fashion, the liability is also going to be valued as if it is going to be paid as on date. So this is basically a difference between accounting when we do with going concern assumption and when we do without going concern assumption. So this is broadly a going concern concept. Then moving to the next slide, which is a reporting requirement for going concern. I think first point we covered, it is specifically mentioned in our reporting framework that management has to do a assessment of going concern as per para 25 in case of management is under Ind AS, and there is a separate para, I guess it is 10 in accounting standard, that mandate management to do a mandatory going concern assessment. Then section 134 subsection 5 of Companies Act also require that board of directors should specifically mention in the director responsibility statement that directors have prepared the annual account on going concern basis In case they have not prepared going concern basis, they have to report that factually in the director responsibility statement. Now, coming to the auditor responsibility. Auditor responsibility, if you see the standard format of audit report in management responsibility, there is a separate para for whether management has done going concern assessment or not. And in the auditor responsibility, there is a separate para which requires that auditor should conclude on the appropriateness of management use of going concern basis, and based on the audit evidence obtained by the auditor, is there any material uncertainty exist which may significant doubt on the company's ability to continue as a going concern. So that reporting requirement we are anyways going to cover in our ensuing slides. Apart from this, there is another requirement for auditor where they need to report on other legal and regulatory requirement, which is basically as per section 143 subsection F. We need to also comment whether the comment which is there in the audit report have any adverse effect on the functioning of the company. So these are the largely audit reporting requirement or management requirement for going concern assessment. So moving to next slide. So now I think in going concern concept, we noted a lot of time we are discussing material uncertainty. So in this particular slide, basically I tried to make you give more understanding what exactly material uncertainty means. Okay, so standard is very clear to say that what is material uncertainty. Material uncertainty is a event or condition when the magnitude of it's basically the event or transaction where the potential impact and the likelihood of occurrence is very much high, which require attention and which needs to be assessed for going concern assessment. Okay, so in this particular diagram, if you see on x-axis there is a potential impact, okay, and on y-axis there is a likelihood of occurrences. Okay, so if you see I have basically included 4 examples. Okay, let's take first example where there is a legal case which is ongoing in a particular company, and the potential impact of legal case is, let's say, 2000 crore, and the company net worth is 1500 crore, and based on assessment it is more likely than not that the case is going to be concluded against the company. Okay, for this particular example, if you see, the potential impact is also high and the likelihood of occurrence is also very high. If both the items are high, it will be treated as material uncertainty for the purpose of going concern reporting. Okay, then moving to the next example, there could be a flood, earthquake in any factory premises. Okay, the impact of course will be very significant, but the likelihood of occurrence will generally be low. So in that case, the potential impact is high, but the likelihood is low. It may happen that we will not consider this particular risk as a material uncertainty. Okay, then moving to the left side, if you see, there in every company there are small frauds which generally happens, which is like bribery, taking commission from vendors, customer. Okay, So the likelihood of occurrence are generally high, but in most of the cases, the potential impacts are low. Okay. Again, this will not be treated as material uncertainty unless there is a significant fraud where the top managements are also involved. Okay. Then again, the last example, which is a particular vendor got bankrupt. We can take in steel industry that Bhushan steel got bankrupt. Okay. But if you see, there are mitigating alternative vendors are available for steel, which could be SAIL, which could be JSW. So it is in this particular example, the potential impact and likelihood of occurrence is low. So again, this will not be considered as a material uncertainty. So this is a chart basically for each significant uh, event and condition which we identify during our course of audit, or management has identified that these are the events or conditions which may impact. I think the assessment we need to do is basically what we need to see the likelihood of the occurrence and the potential impact. If both are very significant, then this will be treated as material uncertainty. Okay, I think few example which I included in this particular presentation just to give more clarity on what exactly includes in material uncertainty. If you see the first example, extreme left, an oil and gas firm stopped by a court from carrying out any operation. The firm is not a going concern because it has to shut down the operation because of the said direction from the court. So this particular event is again this has significant potential impact as well as the likelihood of operation is occurrence is also very high. So in this case, the firm is not a going concern. Then moving to the next example, which is on right side, the company is having significant cash and balances, but does not carry any particular business activity. The net worth is positive. There are no borrowings. So in this particular case, if you see, there are no indicators of material uncertainty because they are not loss making. They have sufficient bank balances. It means they will able to discharge their normal liabilities in a normal course of business. In this particular case, if you see, there is no negative indicator as such. Okay, then moving to the next example, the bank is in serious financial troubles and the government is not willing to bail it out. The board of director has passed a resolution to liquidate the business. In this particular case, if you see, the management itself knows that the company is not going to run for the next 12 months. In that case, the bank is not a going concern. They have to prepare their financial based on breakup basis or liquidation basis. Then moving to the next example, a nationalized refinery is in cash flow problem, but the government of the country provided a guarantee to a refinery to help it out with all the payments. The refinery is a going concern despite poor financial position since it has a support of the country's government. Okay, when we get third party guarantee, so how we basically conclude that yes, it is a audit evidence. I think that part we are going to cover in our ensuing slide, that if we are getting third party guarantee, what additional procedure we need to do as a auditor. The last one, the last example, if you see, a merchandising company has a current ratio below 0.5. Okay, that means the current liability is more compared to the current asset. There is a creditor of around 5 crore demanded payments which the company could not make. Okay, so there is a creditor which has overdue balance of around 5 crore. The creditor requested the court to liquidate the business and recover his debt, and the court grant the order. Okay. If the court order has been received, basically the company is not going to run for next 12 months. Okay. It is a significant material uncertainty. So company is no longer a going concern, and they have to do their financial preparation based on the other basis, which is liquidation or breakup basis. I'll just take a pause to see if there are any clarification or query which anyone has included. Okay, nothing is there, so I'll move to the next slide. Okay, so in this particular slide, I included what are the list of indicators, okay, which is suggested by standard of auditing 570. So basically these indicators I have included into three buckets, which is financials, operational, and others. So in particular financials, the first indicator is again recurring operating losses, negative net worth, adverse financial ratio. I think in earlier example we spoke about if the current ratio is lower than 1, that means your current liability is exceeding. So that is again a indicator. Then inability to pay creditors, again overdue creditors are there. There are default on loans and restructuring of loan, and there is an application filed against the company in NCLT. So all these are financials indicators. Okay. I think in this one or two points which I would like to highlight is that if you see there are startups which generally incur significant losses in initial years. Okay, I do renewable energy audits again in their cases also, because they set up their solar wind plant, and they take significant time to conclude or to start their operation. In these cases, although these are the indicators, okay, but there are mitigating factors. Okay, so we identified, yes, there is a indicator which could lead to material uncertainty. Then the next step, what we do, we identify what are the mitigating factors. Okay, if business has concrete future order, if you see in solar wind energy, generally company gets a long-term contract which range between 20 to 25 years or more than that. In that case, they have concrete future orders which will basically lead to I would say profitable to those entities. And again, if I talk about the negative net worth, particularly if you see in startups, if you see now publicly the information is available that Danjo is also struggling with material uncertainty reporting. Okay, so although there are indicators, but we need to see the management assessment. We need to understand how management is confident that they are going to achieve, or they will basically continue their operation at least for the 12 months. Okay, that part also we are going to cover in subsequent slides. Then again, if you see in operational, there is a first indicator is loss of key management staff. The other one is work stoppage. For work stoppage, if you see, I think you guys must be aware there was a Maggie noodle case which was there in 2015 when Fasai said this is not up to the mark, and they directed that company should take back all the stock which is there in the market. So that is again a critical indicator which we management as well as auditor need to evaluate whether this indicator of material uncertainty will impact a entity's ability to conclude as going concern. Okay. Then the other two examples are loss of major market or supplier. I think supplier part we spoke one example. Then loss of key franchisee license or patent. Then again, the others include non-compliance with statutory requirement. Is there any legal proceeding? If the quantum of legal proceeding is exceeding your net worth, so that could be a indicator for material uncertainty. And then again, changes in government policies. If policies, there is some restriction on export, there is some restriction on import of critical raw material which you are getting it from outside of India, that could be treated as a critical indicator for evaluating material uncertainty. Okay, I'll move to next slide. So yeah, so again, we discussed material uncertainty. We discussed the indicators of material uncertainty. Now, in this particular slide, we are going to discuss the management assessment of going concern. Okay, for management assessment of going concern, what management has to do? Management need to basically assess whether the business is going to continue for at least 12 months or not. Are they confident they able to discharge their liability in normal course of business? Okay, when management do this assessment, what are the responsibility of auditors? What auditors generally do, they discuss that going concern assessment with the management. They understand from management whether management has identified any events or condition that may cast a doubt on entity's ability to continue as a going concern. Then if management has identified, what are the future plan, what are the mitigating factor by which management is confident that the going concern assumption is correct. So again, these are the procedures which we do when management do a assessment for going concern. When management has not performed assessment of going concern assumption, what we do, we discuss that management that how going concern assumption is appropriate for accounting, and we inquire with the management whether there are any events or conditions which individually or collectively may cast significant doubt on the going concern assumption. So this is a management assessment of going concern, and the auditor responsibility on the going concern assessment done by the management. So I think management has done the assessment of going concern. What are the audit procedure which is to be done by the auditor and which is suggested by standard of auditing 570? Okay, so we'll cover that part. So I think the first procedure, again, we need to do an inquiry and obtain management assessment of use of going concern. Then we need to obtain appropriate audit evidences to conclude whether the management use of going concern is appropriate or not. Then we do risk assessment procedures, okay, to identify are there any event or condition which may cast significant doubt on the going concern assumption. Also, during the tenure of our audit, we generally remain alert that is there any additional events or conditions that we identified that could challenge the management assessment of going concern. So basically, the going concern assessment is not a one-time activity, it is a continuous process throughout the audit. Okay, so again, the next once we identify any material uncertainty or indicators, we analyze that part, we discuss that with management, what are the future plans, and basis that we conclude our implication on audit report. Okay, for documentation, I think there is a template which is there in the implementation guide of SA 570 issued by ICI. We will quickly run through that after one or two slides just to see what are the document requirements. So it has like going concern assessment, it has like what are the management assessment, what are the key indicators, how auditors concluded on going concern, what are the additional step which auditor need to perform, how management has included disclosure in the financial statement, and then what are the reporting implication and what type of report you have issued to a management. So that I think we are going to discuss. Then again, for assessment period, I think particularly standards suggest the going concern assessment should be at least 12 months. Okay, it is not limited to that management should only do 12 months, because largely what we see practically management make a plan for like 5 years, 3 years. Okay, so if they have done assessment for less than 12 months, as an auditor, we suggest management that they should cover at least 12 months for the assessment. And in case the period of assessment is less than 12 months, we generally request management to do that 12 months. So there could be two scenario: management do assessment for at least 12 months, then we review those assessment, and in case management has basically not perform a going concern assessment for at least 12 months, this may lead to a disclaim the opinion that we are going to discuss in our audit report conclusion. Okay, and then again, standard suggest the auditor should cover same period what management has used for going concern assessment. So I see, I think there are two questions. I'll take the first one. What happens if management refuse to account for asset and liability without considering that the entity is not a going concern? A very valid point. Thanks. So if auditor conclusion is that the financial should not be prepared based on going concern, if management is saying that it should be ongoing concern, we issue a adverse opinion that we are going to discuss in our next one or two slide. What are the audit report consideration? But to answer you, if there is a difference of opinion that as per auditor, the account should not be prepared based on going concern, and management continue their own assessment of going concern, then we issue adverse opinion where we disclose that there are material uncertainty, and management has in spite of that, management has prepared the financial based on going concern assumption. Okay, and then I think there is one another question which is there from Sanjay ji, that whether curtailment of operation by the company would necessarily amounts to material uncertainty relating to going concern if there are no indicator against it's a going concern status. Okay, very valid point, Sanjay ji. So if there is a curtailment of operation, okay, and there are no other indicators, okay, I'm assuming there is a curtailment of operation, but it will not going to lead to like significant losses, negative net worth, or it will not give to a reason to believe that the company is not going to continue for at least 12 months. In that case, I think this should be okay. But again, this is an indicator. We should document it appropriately why this will not impact our going concern assessment. So moving to the next slide. Yeah, so I think in this particular slide, what we are going to discuss is that let's see that we discussed. There are a list of indicators which if there are any indicators which may impact the going concern assessment. Okay, so if auditor has identified or a material uncertainty which may impact the going concern assessment, when we identify what are the audit procedure additionally we need to perform. Okay, so I think so basically why we are performing this additional audit procedure, let's say company has incurred operational losses or has negative net worth. Okay, so there is an indicator. So what we need to do basically by performing additional audit procedure is that whether management has any mitigating alternative plan or not for that material uncertainty. If management has mitigating plan, then we have to conclude that if we are comfortable with the management assessment that yes, there is a material uncertainty indicator, but management has planned based on that, we are comfortable that company will able to continue for at least 12 months and company will able to realize their asset and discharge their liability on normal course of business. Okay, so these are the additional procedure. And on the other part, if by performing these additional audit procedure, we conclude that there are no mitigative plan given by the management, then the reporting consideration will start. So these additional audit procedure we perform when we identify there, yes, there are events, there are conditions which management, which either management or auditor has identified. Okay, so I think first point is analyze and discuss cash flow, profit, and other relevant forecasts with the management. So I think management generally come up with a plan to say that they will be in profitable after 1 year, after 2 year, 3 years, and the plan could be for 1 year, for 3 years, for 5 years. Okay, once we get that projection, as an auditor, what we need to do, we need to check the reliability of the underlying data which management has used for preparation of the projection, and we need to also basically review the adequate supportings, okay, which support the management assessment. Okay, what are the documents which we generally see? I would say how many concrete future orders they have. Okay, what are the inquiry inflow with the management, what are the conversion ratios from inquiry to orders. Okay, so we basically need to see how management is confident that they are going to become profitable after 1 year, 2 years. Okay, so when we do analysis on the cash flow and profit, so these are the things which we need to basically challenge the management assessment. Okay, Then again, the second point is we need to analyze and discuss the entity's latest available interim financial statement, which is if we are doing audit of March 24 in like July. So for April to June, we should take the interim financial to understand for 12 months budget, did management able to achieve quarter numbers on revenue, on profit. I think that will, if management able to achieve that numbers, I think that that is going to give you more comfort that yes, these projections are achievable. Okay. Then again, if if a particular company has significant debentures or loan, basically as an auditor we should go through the terms of debenture and loan agreement to determine whether there are any significant covenant breach which may impact loan liability immediately, and that could basically lead to a significant outflow for the entity. So that we need to see, and then we need to go through the minutes of the meeting of shareholders, of board meeting, just to understand is there any reference or any discussion, any conclusion on the financing difficulties. Then again, if there are any significant legal cases which are ongoing for a particular entity, we basically inquire with the entity's legal counsel just to understand what is the risk assessment by the legal counsel to conclude of a particular litigation, whether it is high, whether it is low. So that will also give you comfort that how basically management expert is concluding or going to conclude the particular litigation. Then again, the next part is the confirm the existence, legality, and the enforceability of the arrangement. Okay, so I think commonly what we see, there is a third party guarantee, there is a parent support. Okay, so if we get these type of audit evidences, how we are going to check the existence and legality, I think that anyways I'm going to cover in the next slide. So that part is also important. And then we need to evaluate entities plan to deal with unfilled customer order. We need to again perform audit procedure regarding subsequent events. So is there any more similar event or condition that is giving more weightage to your material uncertainty, I think, or that is more mitigating event that support that company can continue as a going concern. That also we need to go through it. Then again, we need to see the adequacy of borrowing facility. We need to, in case there are regulatory action which is NCLT order or some court action, we need to review those report. And then the last point, I think it is largely if management has let's say overdue loan balances which they need to pay immediately. Okay, and when we asked management that how they are going to pay this particular liability, and management may have some alternative mitigating plan to sell off few I would say significant machines or significant plant and equipment. In that case, how management is confident that it has marketable asset, how they are going to realize that particular amount. Those adequacy of support also we need to see. So these are the additional audit procedure typically auditor perform when they identify yes there is a event or yes there is a condition which are a significant and material uncertainty. Moving to the next slide. Yeah. So yes. So when we do a additional procedure, okay. So we ask for few evidences. For example, we discussed that if there is a negative net worth, okay, how management is going to pay the liability. And generally what we get a support letter, or we get a comfort letter from the shareholders that yes, they are going to support entity for at least for 12 months. I think that is a standard letter which we generally take from the management or from the shareholder. Okay. But again, when we get that support letter or comfort letter from the shareholder, basically we need to evaluate the willingness and ability of support which we are going to get from the parent. Okay, how we are going to see the ability? What we do, we generally see the financial statement of parent entity. Okay, whether that entity has sufficient cash and bank balances. There should not happen that particular that entity also has some going concern issue, and they have going concern reporting coming in audit report. Then again, there will be a question mark on the ability to support basically which we are getting. So that is very important point. And typically, if you see, I have done MNCs which have set up in India, and initial years they to penetrate the market, they incur significant losses. Okay, but that is the initial plan from coming from group companies, and we have seen a lot of auto component entities who has set up in India, and we get comfort later. Then we if it is publicly available, we see the annual report, financial statement of that entity, just to ensure is there any ability to support issue from that particular entity. And in case the financials are not available publicly, we try to understand from management that how what is the performance of a parent entity, what are the key numbers. Okay, just to get comfort that yes, there is no issue on the willingness and the ability to support. Then again, second, revenue manage, we generally get a projection from management for revenue and for profitability. And I think that particular part we discussed, we need to inquire what are the order booking, what are the inquiry inflows, how management is confident that they are going to convert those inquiries into order, what are the past history of a management, that how much order basically they have inquiries they have converted into order. Okay, again, if management is providing you a evidence like third party guarantee, okay, so it should be in a written format, what standard 570 is suggesting. Okay, and then again, if you see, typically this is a issue that there are loan which is going to be matured maybe this year or within next year. Okay, and based on financial review, you see there will be a shortage of cash. How they are going to pay that? Okay, and we request management that yes, please provide the future action that how you are going to pay. Okay, management could come up with some like they are going to restructure, they have mitigating plan that they are going to sell some asset. Okay, and there could be another plan that they are going to take some further funding from another institution. So if those are the plan which management is coming with, so we need to evaluate those plans. We need to ask for documents or evidences that what are the ongoing discussion which they are having with the bankers, that how they are confident that it is going to be restructured. So those kind of evidences we ask. Then again, if management is confident that yes, we have negative net worth, but we are confident that we are going to get the equity from our shareholder, then we need to understand what are the feasibility to increase the equity, and basically the shareholders should also be willing to contribute equity. Okay. And then again, in this particular case, we also ask shareholder also to provide support letter that yes, they are going to infuse additional equity in case entity require that part. And we see subsequently if they have actually done some equity infusion, so that will support more on the management assessment of going concern. Then again, I think the last point is disposal of asset. If management is planning as a mitigating factor that yes, they are going to sell a particular segment, particular plant to get some money, and able to use that particular amount for repayment of loan or for discharging their liability. I think we need to assess the marketability, how they are going to dispose that, how they are confident that a particular amount they are going to recover. So those are the aspects when we get additional evidences from the management for key indicators identified. These are the documents which we ask for, and these are the audit procedures we perform to conclude that yes, what management is saying for future plant is more reliable. Yeah, I see another question from Khadija, that startups generally face losses in initial year. Further, they are also in between funding cycle where they may have cash flow issues. In such cases, how can the going concern be analyzed? Yeah, I think very valid point, Khadija. I think somewhere we touched upon this particular case that yes, startup face that particular issue, and if you see publicly the news is available that the auditors of Danjo is also facing some going concern issue, and they have reported material uncertainty. Okay, so in that particular thing, I think there are two material uncertainty indicator. Okay, first, they have significant losses. There could be a chance that they have negative net worth. And then the second is the management projection, how they are confident that they are going to be profitable in future course of business. Okay, so these are the two indicators, I would say. How, so what management plan we generally get? First, that for negative net worth, they are confident that they are going to get funding from their shareholder. For that, again, we request for support letter from the shareholder that they are going to support, and we basically check the willingness and ability what we just spoke. And second, how management is confident to basically achieve the future projection. Okay, I'm sure that we are discussing for the Danjo. Okay, so if a particular auditor must have seen that how Danjo is doing subsequently. Okay, there are other competitor. Okay, there is a Blinkit, Amazon also has similar kind of business. Okay, Swiggy has. If they are doing good, so you need to see the industry trend. Okay, and again, you have to see the industry trend that if the business is growing and it has potential to like generate profitability, generate a revenue, and you need to also understand from management what are their plan to like compete in a particular industry, whether these are convincing, not convincing. I think based on that, basically we need to conclude that whether a particular material uncertainty has some mitigating plan or has I would say not convincing, and accordingly your audit reporting will really depend, which anyways we are going to cover in the next slide. Yeah, so I think this is a short summary of auditor reporting requirement. Okay, I think before that, so we discussed a lot about that entity has some material uncertainty, entity has indicator how we are going to do that. But what about entity who are constant in profitability, who are constant doing year on year growth? Okay, in that case also standard suggests that yes, management has to do going concern assessment. Okay, but again, what standard is saying that it may happen that management is not doing a detailed analysis. Okay, and auditor is also not required to do a detailed analysis or ask management to do a detailed analysis. Reason being, there are no material indicators. Okay, but yes, we take management projection just to ensure that the current momentum, which is like profitability, increase in revenue growth, that will continue. Okay, so that is one part. So I think if you see, the first situation is again that if there are no material uncertainty exist, yes. So basically what I have done, basically in this slide I have bifurcated into three parts. There is a situation, then that situation, how that situation is going to impact our audit opinion, and how that situation is going to impact our auditor report. Okay, so again, the first situation is quite simple, that if there are no material uncertainty, we need to auditor need to issue a unmodified financial statement, which is they basically we confirm that it gives a true and fair view, and there will be no impact on the audit report as well. Okay, and I think the second situation is that company is not a going concern has prepared a financial statement on a breakup basis appropriately and make adequately disclosure of the fact. Okay, so management itself concluded that yes, it is the company is not a going concern. They have done preparation of financial statement basis breakup or a liquidation basis. Again, management has concluded, then the impact on audit opinion will be unmodified. Financial gives a true and fair view. Again, because this particular matter is so significant or an importance, standard suggests that we should also include a additional communication, which is emphasize of matter, standard of auditing 705. Okay, so that 706. EOM we should include when management is not a going concern and they have prepared financial based on other basis. Okay, then again, the third situation is that the going concern basis of accounting and financial statement is inappropriate. Okay, so basically management is saying the going concern basis is appropriate, but based on auditor assessment, we conclude that the going concern assumption is inappropriate. In that case, I think standard of auditing is very clear. The audit opinion will be adverse, and on auditor report, we need to include our basis of adverse opinion. What are the material uncertainty which we have identified where we are not comfortable with the management future plan. Okay, the suggested audit report wording or suggested audit report, that also we are going to cover in the illustrative example. But in this situation, I think standard is very clear that we need to issue a adverse opinion. Then again, moving to next two situation. So now both situations are like, you either management or auditor has identified, yes, there is a material uncertainty. Okay, and there are future plan also. Okay, future plan also, and that future plans are appropriate, and we management and auditor both are comfortable that yes, company is going to continue for at least 12 months. Okay, then again, if that conclusion is there, so financial statement preparation is correct, ongoing concern. Now coming to the disclosure part. Okay, so again, if management has included adequate disclosure for material uncertainty, okay, they have included what are the events or condition which are material uncertainty, and what are the management plan. If that disclosure is there, we issue unmodified audit opinion, and we also include a separate paragraph for material uncertainty related to going concern, to highlight, yes, there are material uncertainty, and for future management plan, we generally draw attention to a note which is included in the financial statement. Okay, so that is a situation where the adequate disclosure is there in the financial statement. Okay, now coming to the second part, where adequate disclosure is not there in the financial statement. Okay, for example, there is a significant legal proceeding. I think we discussed that particular example, that the quantum of legal litigation is like exceeding your net worth, right? In that case, company has given only one liner to say that there is an ongoing litigation, not included any amount, not included the fact, yes, this is a material uncertainty, not included the future plan in case this particular case went against to the company, what are the future plan to the company. If all those are not there, again, this will impact your audit opinion. This could be qualified or adverse based on whether it is pervasive, not pervasive. Okay, and basis that conclusion, we modify our audit opinion, and we include the basis of our qualified and adverse opinion in the audit report. Again, for this also we are going to discuss the example that how we draft our audit report, and what are the key pointers which we generally include in that particular reporting. Then again, the last point is basically management has done the assessment, but they have not covered at least 12 months, which is suggested by our regulatory framework. In that case, this could be either qualified or it could be disclaimed in an audit opinion. And again, in audit report, we need to include the basis of our disclaimer of opinion. So basically, these are the 6 situations which generally impact our audit opinion and audit report. Okay, so basically this is more when we conclude that conclude on the going concern. First, is there material uncertainty? Is there? Not there? Not there, no issue. Okay, if there are material uncertainty, whether it is going to lead going concern assumption or no. If no, then again no, not an issue. In that case, if the event is very significant, we can suggest management that they should include some notes in the financial statement. But yes, again, there is a going concern issue and management is not agreeing, adverse opinion. Then adequate disclosure, not adequate disclosure, then again the period which management has covered is less than 12 months, this will lead to a disclaimer of opinion. So these are the situations for audit report. I'll just check, is there any questions on that? Okay, there's no question. Okay, I'll move to the next part. Yeah, so I think this is a disclosure requirement. Specifically, standards suggest if there are material uncertainty identified, what are the disclosure requirements? So again, we need to include what are the event or condition and what is the management plan. And again, we need to clearly ensure that the disclosure contain, yes, there are material uncertainty and management may not be able to realize its asset and discharge their liabilities. Okay. Then uh, other two quick points. I think first one we discussed, if there is a history of profitable operation, yes, detailed analysis is not required. Then second, when we do consolidation and practically I have seen I am doing a consolidation of an entity that it has more than 20-25 subsidiaries, and there could be a possibility that one or two subsidiaries auditor report has some issue on going concern, or they have reported some material uncertainty. When we issue a consolidated report, I think we need to basically see whether that subsidiary is material, not material. If it is material, do we want to include that reporting in our audit report or not? So that is something we need to conclude, and basis materiality, our reporting parameter will change. Yeah. So I think so basically we discussed management assessment, we discussed auditor assessment, additional procedure which management need to perform or auditor need to obtain as a evidence from the management, and when we identify uncertainty, how we are going to report that. So that was basically how management and auditor conclude the going concern assessment. Okay. So there are few examples which I think we'll quickly go through it. If you see in the first example, the entity is a manufacturer of television. Okay, and they are not doing well, and particularly for this entity, if you see their current asset are less than the current liability. Okay, so they have net liability of like 300 million. But I think one other fact is there, due to expected favorable changes in the government policy, the entity is projecting profits in coming year. Okay. So I think the question is, the entity should prepare their financial statement under going concern or not. Okay. So I think just to conclude on this example, if you see there are two factors. Okay. I think there's a net loss for the company and there's a working capital deficiency of around 300 million, which we discussed. Okay. So I think for this particular two uncertainty, management has two mitigating plan. Okay. First, the funds will be arranged by the shareholder. For that, we are going to test whether there is a willingness and the ability with shareholder or not. And on the projected future profitability, again, we need to see the projections are reliable, not reliable, okay, and how management is confident on the achieving the future profitability. Based on that, if we conclude that yes, these are the mitigating factors, then we can document as an auditor that yes, these are the material uncertainty, these are the mitigating factor. So there is no issue on the going concern assumption. Okay. And again, if management, if auditor wants to include a particular note in financial statement, to say that what are the management plan, that we can include. Okay, so otherwise, I think if management has confidence that shareholder is going to infuse equity, and they have concrete future plans, I think basis that we can conclude, yes, company, no issue on the company's ability to continue as a going concern. Moving to next illustration. Yeah, I think in this particular example, if you see, there is a particular entity who has accumulated losses, okay, and they also have unsecured loan, basically granted by promoters. In this particular example, you see they basically have confidence that they will get the money from the shareholder. But if you see, there is no as such business plan which is available, that a company will be profitable in future years. So I think this particular case, it may happen that basically there is a material uncertainty, and management has a future plan. Okay, in that case, we basically management will should include the adequate disclosure for material uncertainty in financial statement. And auditor should also, because if there is a adequate disclosure in the financial, management has included, what auditor should do, auditor should issue a basically unmodified opinion with separate paragraph on material uncertainty related to going concern. In that particular case, auditor should bring out the event or condition which impact the going concern assessment, and draw reference to the note where management has included the future plan. Then I think in the next example, the entity is in a real estate. Okay, post demonetization and introduction of GST, there was actually a recession of real estate sector. Okay, and management has significant inventory. Okay, for that, management does not have any concrete future orders. Okay, in that particular case, if management doesn't have any realistic future plan, so there is a material uncertainty, the answer is yes. And there is no mitigating factor in this particular example. It is evident that the use of going concern basis is not appropriate. For I think for this particular example, management should do preparation of financial statement assuming there is no going concern assumption. They do valuation of asset and liability on the basis of realization. And if management is doing that, yes, auditor will continue to give EOM in the audit report. But in case auditor believe there is a going concern issue, and management still prepare their financial assuming that the going concern assumption is appropriate, in that case auditor issue adverse opinion and include the basis of adverse opinion in the audit report. Moving to next example. So again, I think in this particular example, if you see, there is a startup company who is manufacturer of e-motor bikes and e-rickshaw. The company has share capital, has significant unsecured loan. Okay. And company has incurred losses of 50 lakh because yes, it is a startup and it is initial years of operation. Okay. Then again, if you see, there are a few material uncertainty which is included, like bankers have refused to provide finance. The promoter is discussing funding from PE investor and is hopeful of getting PE investment for the particular project. So in this particular scenario, so basically the question is how should the auditor get the sufficient appropriate audit evidences to conclude on the going concern assumption. So I think this, for this particular example, what are the additional procedure, what are the additional evidences basically auditors should obtain to conclude whether the going concern assumption is appropriate. So these are the indicative procedure which auditors should consider. I think company is a startup. I think we discussed, and this is the first year of operation. Okay, if management has concrete plan and basically if you see the business they are into, it is trending and this is going to be like profitable business, that entire industry is growing. I think that also should be considered by the auditor. And then again, auditor should also see, is there any tax benefits, subsidiaries which are available. This will lead to a inflow to the management. Okay. And again, the auditor may also see, is there any finance available for similar startups. So I think we discussed the Dunjo startup case, that how other similar startups are doing. They are getting funding, they are not getting funding. Okay. How, what are the business plan or growth which they are demonstrating. So I think those things also we need to keep into mind. Then again, future projection, yes, we need to see, we need to take, and then again we need to see how reliable that future projections are. And then we need to take what are the inquiries, what are the orders which they are getting from the customers. Okay. And also in this particular case, there is an unsecured loan, 500. So I think we also see that what are the option available with the company to convert this loan into a equity. If promoter is going to convert into equity, so company will have that fund available. Okay, that will also give as a mitigating plan from the management. Based on these procedure, if you see that yes, there is a material uncertainty, but again, with the mitigating plan, if that going concern is appropriate, I think then no reporting is required. If as per auditor judgment, if the supporting which we are getting is not concrete or not concluded as a management plan, then again the reporting requirement will be applicable. I think I got one question. Yes, so I think there is one question, that can letter of intent from new big customer can be considered as a mitigating factor while the company is facing an issue of loss of major customer. Okay, so I think if you see, the letter of intent is basically not a contract from the customer. Okay, then again we need to see the entire email chain, that how management is confident that the order is going to receive by the entity. Okay. And in the mail chain, if you find that yes, company is L1, or subsequently, if management has received a contract copy and the order has also started executing, and based on that, I think you can take that comfort and conclude that yes, this is a win for a management. So I think that is for you, Noman. And then again, I think we got another two questions. I think I'll quickly go through. Can you give an example of an audit report of a company where going concern was very much doubtful? Okay, so I think I'll give you one example. I was doing one auto entity where they basically used to manufacture a component of a particular I would say model or a brand. Okay, and what basically we noted that the company was a loss making. Okay, and whatever component they were basically manufacturing, those particular parts are basically relating to the old models of that particular brand. Okay, so it may happen that those particular model will not exist after 3-4 years. Okay, and in that case basically we challenge the management assessment that how you are comfortable that because you don't have any order for new models, you only continuing with the old model. Then I think what management said that even though there will be no new model, but if you see a particular model, even though if that model gets scrapped, the cars are into road. Okay, they will need some components specifically for regular repair and maintenance. Okay, so I think in if you see in this particular scenario, although management does not have any order for I would say new model. Okay, but they are confident that their old model will also contribute significantly in their business. I think those are the judgmental area where we need to basically conclude whether they will able to achieve their future projection or not. Okay, then I think I hope I able to answer your question. Then I think I got another question from Devabroto. Okay, so if the company has been doing losses continuously from the date of incorporation till date, the company is 10-year old. Okay, the net worth has eroded. Also, there is an ECB from a promoter company, and every year the promoter is funding the Indian company by infusing equity every year. In such case, disclosure of the same in the financial is to be done, and also the audit report needs to be modified. Okay, so I think in this, what I understand with the fact, Devabrata, yes, there is an indicator for material uncertainty. There's a first indicator that net worth is eroded. Okay, and there is a ECB loan from the promoter company. Okay, which they are infusing equity every year. Okay, so this is more of a I would say mitigating factor for this particular net worth. Okay, then if you see company has a history of 10 years, they are incurring losses, but they are getting support from the parent, and that history is there that yes, parent is supporting. In this case, my thought process is that definitely there should be some disclosure in the financial because the net worth is eroded and parent is supporting. And with that past history, okay, continuously if you don't get any other material uncertainty indicators, that there is no market and management is not going to run in next 12 months. Okay, if those indicators are not there, I think I would suggest that there will be no reporting requirement in audit report, because there is a one indication for which you have mitigating plan, and for that particular shareholder, again year on year we need to see willingness and the ability to pay. If those are there, I think my suggestion would be yes, disclosure should be there in the financial statement, but it may not lead to any reporting in the audit report. Okay, then I think yes, there is another question, Ashish Mehta. If the entity get notices from tax department like Infosys 32,000 crore demand notice, so will it be considered as a going concern issue? Ashish, yes, absolutely, you are right. it is a material uncertainty indicator. Okay, there is a 32 crore demand notice. Okay, now we need to see how much is the net worth of that particular company. If it is 1 lakh, 2 lakh crore, then this will not impact significantly on the going concern fact. Okay, but again, if your company net worth itself is 10,000 crore and you're getting 32,000 crore, so first there is an indication. Yes, there is an indication. How we need to mitigate that part? First, we need to get management assessment. How management is confident this demand will not turn out against the company. If management is confident, they are giving you that assessment, and we are confident with our the management assessment. Like we also discuss with our IDT expert, and you conclude that yes, the likelihood of the occurrence converting into against the company is very low. Okay, impact is high, but it is low. Then I think this will not impact our going concern issue. But yes, the likelihood of occurrence is very high. Yes, you need to this will impact as a going concern, and we need to understand from management what are the mitigating plan. If management is confident and they have some alternative funds available to repay this particular thing, I think there is a material uncertainty and future plan. This will lead to a disclosure from the management, and yes, you have to draw that note reference in the material uncertainty related to going concern para in your audit report. Okay, so I think there is another question that can we change the heading regarding going concern in audit report from material uncertainty regarding going concern to assessment of going concern. I think Kshitij, this is the standard audit report template, I think, which is issued by ICI. I would suggest that we cannot change that heading because it is a standard audit reporting wordings. Okay, then I think I'll continue. So these are the illustrative reporting wordings. Okay. So if you see in this, there are three sections. Section A is basically how basically we report on the material uncertainty related to going concern. So in this particular wording, if you see what we have done, basically we have reported what is a material uncertainty. The uncertainty is company net worth got eroded, okay, and company's liability is exceeding its current asset, okay. So there is a material uncertainty, but management has plan for which we have drawn attention to a note whatever to the financial statement, and we concluded our report is not modified, but this material uncertainty management has included appropriate or adequate disclosure in the financial statement, and we have drawn reference in our audit report. So this is basically a reporting of material uncertainty. Then second section is basically for going concern disclosure. We discussed that the note should include specifically what is the material uncertainty, what are the event and condition, and what are the management future plan and action that they are going to take. And the note should also conclude it may happen that company will not able to discharge their liability or realize their asset on a normal course of business. And if that particular disclosure or requirement is not there in the financial statement, this may lead to basically qualified opinion. If you see in the opinion, we have included in our opinion and to the best of our information explanation given to us, except for the inadequate disclosure of material uncertainty related to going concern referred to a basis of qualified opinion section of this report, the aforesaid financial statement gives a true and fair view in conformity with the accounting standard. Okay, If you see the basis of qualified opinion, the company's financial arrangement expired and the amount outstanding to the tune of this much was payable on this, the company has been unable to renegotiate or obtain replacement financing and is considering filing an application under insolvency and bankruptcy code. These events indicate a material uncertainty that may cast significant doubt on the company's ability to continue as a going concern, and therefore not it may unable to realize its assets and discharge its liability in the normal course of business. The financial statement and notes thereto do not disclose this fact. Okay, so this is a qualified opinion, one sample. Quickly on the section C, if you see, when auditor has concluded that entity is not a going concern, but management is confident the going concern assumption is appropriate. This is a structure of adverse opinion, where in opinion para we give reference of basis of adverse opinion, and in basis of adverse opinion we write what are the material uncertainty is there, and management does not have any concrete future orders in hand or whatever the case it is, and we include that paragraph in this. And if you see in the last line, the suggested language is the financial statement do not disclose this fact despite significant uncertainty as described above. These financial statement has been prepared on going concern basis. So basically this is a adverse opinion. So I think moving to the last illustrative, uh, this is basically with management report. Basically, this is the extract of one listed entity. Okay, if you see in the management note, there is what is a material uncertainty for a management or for a company, that is included. Management future plan is also included. If you see, company is in discussion with its lender to obtain approval for an implementation of an appropriate debt resolution plan. Okay, and company will continue to be in operation in the foreseeable future. So uncertainty is there, management plan is there, and why management believe use of going concern assumption is appropriate, that also included. So there is an extract of audit report also, that paragraph which is material uncertainty relating to going concern. There is a note reference for on which we have drawn attention, and what is a material uncertainty? It is specifically included in this particular note. So I think I got one or two more question. I think I'll take that quickly. I think Sanjay Pai has included one question. In case of running company, experience of running more than 2 decades, okay, having NPA with couple of lenders, while some are standard, okay. However, company has active business and is generating cash flow, EBITDA positive and net worth positive. What is your thought on going concern? Okay. So if you see, I think if there are no material uncertainty indicators and business is doing good, no issue on the EBITDA, cash generation, everything, this is giving more comfort to say that yes, company will continue at least for 12 months. Okay, and there are no material uncertainty indicators. So without any detailed analysis also, I think we should be comfortable with the going concern assumption, unless there are no other event or condition which may impact. I think in this particular case we should be okay with that. Then I think there is another question from anonymous. Okay, company is incurring loss since its inception. However, director shareholder has committed that they will provide a unsecured loan wherever required by the company. Director shareholder has also committed that if in future company is unable to repay loan, then director and shareholder will waive off the loan. Okay. So I think in this particular case, again, there is an indicator. Yes, there is an indicator, and we need to see the willingness and ability to support by the director and shareholder. Okay, and if there is a past history and director and shareholder has no issue on net worth, I think in this particular case, if we are comfortable on the future projection of the company, and and we are comfortable with the mitigating plan which management has, I think there should not be any issue for this particular case. If management has losses since inception, we can also suggest that they should include some disclosure in the financial statement for the losses which they have incurred. Otherwise, I don't see any issue. Yeah, Devabroto, I think we are going to share this presentation. So yes, I think I have taken significant all Q&A, but I think yes, there's one more from Prafulla. Yes, company is non-operative, but it is not closed. No operation, net worth eroded. Whether opinion is required. Yes, I think if net worth is eroded and they have negative net worth, I'm sure they will have some current liability. They if a company will not able to, I would say, discharge their liability in normal course of business, and it is not operative. It may happen that in this particular case, I think basically first we need to understand from management what is their plan. They are going to close this business voluntary, or there are some legal proceedings which are going on. Okay, and if there are no convincing evidence which we are getting, this is a case where I think there is a going concern issue. If management agree, no issue. If management does not agree, we should give adverse opinion. Yeah, so I think largely I have covered all Q&A. If there are any other questions, or I would say any thought process, or any case which anyone wants to highlight, I think we can take up that, and we can discuss that part. I think one thing which I have missed is that there is a separate template which is a part of implementation guide of SA 570, which include a checklist, 5-page checklist. Okay, I think you can go through that implementation guide. I think that checklist, if you see, checklist has going concern assessment. They have included all the indicators, possible indicators. You can include your responses, yes, no, not applicable. Okay, based on that responses, management assessment. If some management, if management or auditor has identified any indicator for material uncertainty, what are the additional procedure you have performed, not performed? You discuss with management, not or not discuss with management. If that particular material uncertainty concluded as a material uncertainty and management has mitigating plan also, in that case appropriate disclosure there, not there, what are the reporting consideration? Because I think that particular checklist, I would say, is like end-to-end auditor responsibility and management responsibility is included. I would strongly suggest that for all entities, I think we should basically fill that checklist, keep it in our documentation file, and this for even though there's no indicator, I think we should include that in our documentation. I'll just check if we have more questions. I think we can discuss. Okay, I think I have covered all the Q&A. I'll pause for 1 minute. If you have any other questions, if you have any other thought process which you would like to share, please share. I'll discuss that.
Hello, am I audible?
Yes, you are audible.
So participants, if there are any doubts left, so please you may ask, so that we can proceed further. I think many of the doubts have been cleared of our today's participants. I think I couldn't see any more. If you could see, please tell me.
No, I think I have covered all questions. So maybe I think thank you everyone for the participation. I hope we had a good interactive session, and I'm able to uh, respond on your queries. In case you have some more doubts or you want to share any feedback, feel free to connect with me. I just shared my contact detail. So thank you everyone for participation.
Yeah, so hello, good evening, everyone, and who are present out there in this virtual seminar of Audit and Indes. And firstly, I would like to thank our chairman, C. Ankit Rathi, for giving me an opportunity to share the vote of thanks for today's speaker and our today's session. And CA Chintan Patel, sir, thank you, and my fellow coordinator, CA Chandan Lahoti, for driving such a beautiful session. And coming to our speaker, C. Chandraprakash Khemka ji, I would like to convey my heartfelt gratitude to you, sir, for giving such an in-depth explanation on our today's session on going concept uncertainty, going concern uncertainty, and the roles and responsibilities of the auditor and the reporting requirements overall. So thank you, sir, for presenting it with such good examples with good illustrations. Thank you. And I'm sure it has been a value addition to our participants for, doing their day-to-day practice greatly. And
Yes.
really, and also I would like to add that you have really taken up the questions of our today's participants very well. So thank you one and all. And also I would like to add that if any queries are left behind of our participants, you can very well connect with us so that we can share it with sir and to resolve that queries also. So, and I'm really impressed that our participants are here till the end of the session. So thank you one and all. And I expect in our that you will be connected with us in our future endeavors also. Thank you, sir. Thank you, participants. It was great. Thank you. Thank you one and all.
Thank you. Thank you, Sharun. Thank you
Yeah,
for yes. Thank you.
it was great meeting, sir. Thank you.